So welcome everyone and happy Wednesday. My name is Jonathan DiCarlo and I'm the CEO of C4 Consulting. And welcome to the second installment of our interactive support series, Financial Trauma Recovery, hosted by C4 Consulting, a regular discussion series offering collaborative connection, consultation, and support. Our goal for this experience is simple. Financial health, most often a topic of great concern, but receives far less transparent attention and collaborative support. Creating awareness and offering considerations towards the healing experience of financial trauma are the focus of this session today. C4 Consulting is committed to providing a trauma-informed connection space for discussion, hope, and support through peer collaboration. Our agenda today will be fairly straightforward and simple. We'll begin with an introduction of our panelists, followed by an invitation to join a brief grounding exercise. We'll spend time defining financial trauma and discuss the healing and recovery process. We'll conclude the discussion and spend a few minutes reviewing highlights from our time together and close with a grounding exercise before adjourning. We'll be engaging a poll during the opening and closing portions to encourage your active feedback and participation. We'll share the results live throughout the process. For a reminder, as many of us are likely to get zoomed out at some point in this day, let's quickly review some etiquette and guidelines for our time today. We ask that you be courteous, genuine, and respectful with your investment. We ask that you be an active participant by asking concise questions and listening openly to the information shared. We ask you to keep calm, relaxed, and provide your feedback with integrity. You can submit your questions throughout this process to the Q&A, and we'll be including those in our discussion section towards the end of the presentation. You can also reach out directly to any of our panelists via their contact information on our website or their email addresses as provided in the chat window. Let's take a moment to introduce the C4 Consulting team members on our panel today. It's my pleasure to introduce Senior Consultant Rob Ryberg. And also joining us on our panel today, Senior Consultant Chris Bennett. Again, my name is Jonathan DiCarlo, and I'll be facilitating as a panelist as well. Our support team members include in the background, Jesse O'Donohue and Ryan Rohde. For more information about today's panel members, see our website for detailed bios and contact information to stay connected with us through the link being shared in the chat right now. At this time, we'll run the first poll to get your feedback. Take a moment to answer the polling question at your convenience, and we'll share the results live in a moment. The results should be coming up momentarily. So we're showing personal financial health as the greatest concern shared today, followed by community financial health, and then organizational financial health, and getting through the day without thinking about financial health as tied for even. Before we begin, We'll invite everybody to take just a brief moment to join us in a simple grounding exercise, seated right where you are, in your chair or standing if you prefer. We invite you to take a deep breath in through your nose and let it out through your mouth. We invite you to take a deeper breath in through your nose, hold it for a moment, and let it out through your mouth with a sigh. We invite you to take a deeper breath in, hold that for as long as you're comfortable, and let it out with a loud sigh. And finally, we invite you to take as deep a breath in through your nose as you're comfortable with. Hold it for as long as you choose, and let it out with as loud a sigh as possible. To begin with, we want to define what is financial trauma. So in the process of preparing and exploring this topic, reaction to change comes up as a dysfunction to a significant loss or change of financial circumstances as part of the core definition of financial trauma. Financial trauma often presents with symptoms of post-traumatic stress disorder, such as intrusive thoughts, avoiding reminders of traumatic experiences, negative thoughts and distorted perceptions, and arousal and reactive symptoms, often presenting with intense hypervigilance around financial stress. Financial trauma often presents from several sources and usually is not consistent to one identified source, both being personal and from an organizational sense. And throughout our discussion today, we'll be honoring and acknowledging to both the experience of personal trauma recovery and organizational trauma recovery. Personal trauma recovery can have origins is starting with a job loss, change to wages, or the depletions of savings or opportunities for financial support. Organizational trauma, having many different sources, can also be identified from losses of revenues, increase of costs, and reduction in demand or addition of debt for an organization's service or cost structure. The sources of financial trauma recovery at present are clear, but often are not isolated. With unemployment continuing to peak and rise over the last number of months in the COVID-19 economy, from GDP collapses where the US economy contracted 9.5% in the second quarter or 32.9% annually year to date, with eviction moratoriums showing as many as 30 million Americans facing eviction in the coming months. And opportunities such as restaurants closing. Yelp shows that over 26,000 restaurants have closed and 16,000 restaurants are closed permanently. When we look at these sources and the COVID-19 impacts in current economy, we identify that financial trauma is something that everyone may be experiencing, but not everyone may be recognizing.
And when we begin to really explore how does financial trauma begin to happen, what are the steps or the things that occur, the processes that occur that get us to this place, whether this is from a personal perspective or from an organizational perspective, we talk really about three different key points here. First and foremost are the practical measures. And so one of the things that, of course, we're all dealing with right now, and really the world is dealing with, are things out of our control. And so we think about things like COVID hitting. And ultimately, we don't have control of when a virus hits and the way that our government responds to that. So there are definitely, of course, things that are not within our hands to control how this occurs. But also looking from the standpoint of, lack of knowledge is a really key point. And so again, people might throw out that spending time, using a budgeting software, monitoring expenses, of course, these can be helpful in the process of personal finance, as well as, of course, from an organizational or business financial standpoint. But having the lack of knowledge to see how decisions we make today actually impact us 3, 6 months, or a year from now. And when we begin to talk about from an organizational standpoint, it's also really looking at, do we have the right people in the right roles within the organization itself? And so when we're relying on individuals within the business to make decisions for the business and for the long-term health and well-being of the business, really ensuring that we are examining their skill sets and their levels of expertise and understanding in order of how to forecast, how to support. And if we have people that are in the wrong roles, we will often find businesses getting themselves into significant trouble. Of course, from a business perspective, expedited growth within an organization as well. So of course, you've probably heard very often, a lot of times businesses grow very fast and they're not really ready for that growth. And so, financial trauma can definitely begin to occur as things feel really good. Business is operating really well, revenue is really generating, but we decide to make certain investments or put money into the growth without really paying attention sometimes to key performance indicators and metrics, and really understanding our benchmarks for how we make decisions. And again, that really crosses both sides from a personal perspective and business. How do we make decisions in our personal life, and what are we actually being able to examine and look at before spending money on a certain thing or in a certain area, as well as for the business itself. We also talk about really emotional. And so we speak to this idea sometimes about the idea of living in hope. I'll use an example. Living in hope from a business perspective may look like, we look at the finances here, and if we just get 3 more clients to admit this month, we'll be good. And so really kind of living in this, the business will sustain itself. It will get to where we need it to be if these things just happen, without a really significant plan to make that happen, or a track record to actually show that that's a reasonable thing to occur in the next month. Obviously, we speak really from this place that denial, rationalization, justification, and then really how emotions begin to cloud our decision making, right? So anyone on this call will of course recognize that when we have heightened emotions, when we have heightened levels of fear, anxiety, these different things going on, we have a difficult time remaining really objective. And then really the response we see, and Jonathan discussed this on the last slide, this idea of we begin to operate a lot of times from the perspective of this very primal survival instinct part of ourselves. And so we really can see how we begin to operate kind of in one of 3, if not multiple or all of these different phases, from a position of fighting, so fighting the experience that's going on, again, denying, justifying, rationalizing, flight from that experience, right? So running away from it, not paying attention, just kind of completely separating yourself from it, or freeze, completely being stuck, almost being able to see all the different angles, but at the same time not being able to make a decision to move forward. Let's go next. And so especially from an organizational standpoint, we think about, what does this really look like? What are you going to see? What are you going to experience within an organization? I think the things that are really easy to actually see, and when we're paying attention to the way that we're operating, whether we're operating as an executive team, whether we're operating with employees in the organization, you really start to see a few different things. One really being blame. It's really easy, of course, when we fall into this state of mind, we start to blame. So we start to look at a particular department, a particular employee, a particular partner, whatever it is, and we start to place blame. Also, how we begin to develop these really maladaptive patterns within our team. And so how we're communicating with each other, what's being communicated, how transparent are we being with each other. And of course, what that then leads to is, of course, relationships within the organization beginning to fracture. And so, we all know that if relationships begin to fracture, it's much more difficult to sit in a meeting, to be objective, to really look at the whole picture, because again, we're starting to experience these emotional processes that are occurring. And so, it also leads to feeling overwhelmed to burnout to people really operating from a place of ego or really an individual focus. So again, when we look at trauma and survival, we all, when we're in a situation, we're of course looking to protect ourselves, right? We're hardwired to want to survive. And so from an organizational standpoint, when we start to see employees or partners or management teams kind of fracture and separate, people start to really think, what do I need to do to take care of myself, right? Versus kind of that value-based or kind of mission aligned, how do we kind of do this all together? How do we do this as an organization, as a team, instead of an individual? And I think the things that kind of go unseen, or the things that we see really behind the scenes, are, of course, isolation. And so again, people not spending time at the office, people leaving as quick as possible, people not getting together outside of work, really starting to see these isolative patterns. Of course, fear, sleepless nights, anxiety, panic, desperation, shame, guilt, racing thoughts, right? And so when we think about this systemically, we can really look at an organization very similar to a family. We can look at it, similar to how we would as an individual experience trauma. And there's so much crossover between the way that an organization will operate kind of within the parameters of financial trauma, as well as how we may as individuals. And when we think about what is the organization experience, or or your employees or your staff, when they see a lack of enthusiasm from leaders within the organization, when they don't see people showing up that are fully aligned, fully committed, and really being able to work through these things, they will start to notice not living by the values, that the organization starts to feel kind of misaligned, emotional dysregulation. We all know that all of our employees and staff look to us and to the leaders of an organization to provide stability, and to be able to model how we want them to be able to approach everything, on a day-to-day basis. And so when they begin to see how fear and anxiety really begin to permeate through a management team or through a team, of course, the staff will then begin to experience that. So whether or not something is actually being talked about, whether or not something is actually being said, people will experience that throughout the entire organization. And so I think what can naturally sometimes occur with this is you start to look at how do priorities shift. And so, in speaking, specifically to, let's say, a treatment center, priorities may really shift from this idea of, really, valuing clinical care, and shifting slightly to just saying we really need to focus on admissions and retention within the organization, right? And so even these very nuanced shifts can really create a train that's moving, probably not in the best of direction for the organization. And then, and then really, I think underneath, when we talked about this staff idea, staff begin to, if the leaders are fearful, if the leaders are experiencing anxiety, that's exactly what the staff are going to feel. These present very real, practical considerations of financial concern. And so if the business begins to experience financial trauma and we're not taking really progressive and actionable steps to look at this and to address it, we begin to look at how the staff begins to operate the same way, which again then will create things like relationship difficulties, isolation. So a lot of the things we talk about from the organizational or the management side of things, we're going to see a lot of those same things when it comes down to the staffing or the employee level as well. Go ahead, Ryan.
Good afternoon, everyone. My focus today will be to introduce techniques to assess the financial health of your business or personal life. I'll be speaking about the topic largely from an organizational standpoint, but if you're experiencing personal trauma, please feel free to apply the formulas or ideas in your own life. I apologize in advance if any of the materials are too elementary or complex for the viewers. Please feel free to reach out to me or any of us after the webinar with any questions. To start, if you review the quote at the top of the slide, businesses don't go bankrupt because they're unprofitable. They go bankrupt because their cash reserves dry up and they cannot meet obligations. We have many examples of this in behavioral health. Accounts receivable get stale, cash flow dries up, credit isn't available, staff gets laid off, the business can no longer provide services to generate revenue. It's a death spiral. Today, we are going to go through 5 ratios which can be used to gauge the financial health of your business or personal life. We will start with monthly net income. It might sound silly, but many businesses or individuals don't track their monthly performance with an income statement. In business, net profit is your total revenue minus cost of goods sold, expenses, depreciation, interest, amortization over any given accounting period. In your personal life, net income would be defined as gross income, less taxes and other deductions. Obviously, your profitability and margin are dependent upon things like the service you're providing, payers, geography, etc. But this can be used as a quick gauge to measure big changes to your revenue or cost month over month or year to date trending. Next slide, please, Ryan. Next is current ratio. Current ratio represents a company's ability to pay its current liabilities with its current assets. This is a quick measure of a company's liquidity, efficiency, and short-term financial health. So your current assets are your assets that you can expect to be conveniently liquidated within a year if need be. These include cash, cash equivalents, accounts receivable, inventory, things like this. Current liabilities are financial obligations that are due within 1 year of a normal operating cycle. So for this calculation, we are taking current assets and dividing by current liabilities. An ideal range is really anything above 1, 1.2. A ratio under 1 would indicate that your company has more debt due within a year than assets, and you're likely going to experience a liquidity problem. On the other hand, if your company has a very high ratio, like 3, 4, anything in that range, this would indicate, that you can cover your obligations 3 or 4 times over, but you might not be using your assets efficiently. This is a good medium or long-term tool to assess the feasibility or strength of your business at any given time. Next slide, please. Thank you. Debt to equity ratio. This financial ratio is used to gauge the relative proportion of equity and debt used to finance assets in the business. This is generally used to see if a company is over-leveraged or how much leverage it is using. This is calculated by dividing the company's total liabilities or its total debt by total shareholder equity or the net worth of the company. Generally, higher leverage ratios indicate a company with higher risk to shareholders. Most analysts consider anything between 1 to 1.5 to be acceptable. A ratio of 1.5 would indicate that for every dollar of self-financing or investment in the company is borrowing another $1.50. So a high ratio means the company is using debt to finance growth. It's not always a bad thing. This is a good short-term solution and way to gauge changes in your company. On the personal side, the debt to equity ratio is used when an individual or a small business is applying for a loan. Lenders often use debt to equity to evaluate how likely it would be that a borrower would continue making loan payments if your income was disrupted. Next slide, please. Next is debt service coverage ratio. This may be one that you're probably most familiar with. It's commonly used in underwriting for both personal and business loans. This is a ratio of operating income to debt service. It is typically used to measure an entity's ability to produce cash flow to cover debt. Acceptable ratios are based upon macroeconomic conditions. Right now, it's contracting, obviously, so you can expect a little less flexibility in underwriting. But the formula here is EBITDA, which is defined as earnings before income, tax, depreciation, and amortization over a year, divided by principal plus interest obligations due within the coming year. So the DSCR means, below 1, you would have negative cash flow. An ideal ratio is 2 or higher, meaning that you generate twice enough cash to cover your debt obligations. The inverse of this might sound familiar on a personal level. When you're buying a home, this is called debt to income. And you might be familiar that the max debt to income ratio is 43%. So represented as an inverse, the DSCR would be about 2.32 times. So you would generate enough cash to cover your obligations 2.32 times over. This is a good medium-term tool to assess your business or personal life. Next slide, please. Here's our last ratio. This is return on equity. This is a measure of profitability in relation to equity to gauge how effectively a company is using assets to create profit. ROE is expressed as a percentage and can be calculated by dividing your net income by the average shareholder equity, which is basically an average between the beginning and ending balance over a period of time. This ratio is used on Wall Street, but can also be used in your small or mid-sized business or personal life. This is basically net income divided by net worth of a business. Because different businesses have different growth patterns and valuations, it will depend upon many variables. But you can gauge this against, average market returns of the S&P or something like that. It's about 14%. So anything below 10% would be considered poor. You can use this formula to develop realistic growth expectations for your business and assess the future. It is important to know that if your business has inconsistent profits or excessive levels of debt, this won't really produce well. So it's more of a long-term growth tool for steady businesses or steady cash flow. Next slide, please. So now we've gone through these exercises. Let's talk about what you have control over and what you don't, and what you can do today if you're experiencing financial hardship. So first, ensure that you or someone is keeping clean records and you have them readily available. Whether you're a C Corp, LLC, or sole proprietor, you will need to have clean monthly financial statements to access debt, equity, or show someone else what is happening with your business. If you only do books annually or can't define the problem, it will be difficult to find a solution. The best way to do this is have a bookkeeper produce monthly records at the end or the close of each month. If you need a referral or want to talk to us about it, please feel free to contact anyone at C4 Consulting. Second, make sure you're receiving these reports regularly. I think it's imperative to have them, at least monthly. If you're using an EMR, a billing system, or have a finance team, put together a weekly key performance indicator spreadsheet and build metrics. Decide what it is. It might be admissions, authorization, length of stay, revenue per day, reimbursement, but things that let you gauge your performance and make critical decisions. This will help you to act fast when you see things deteriorating or growing. Lastly, assess the situation and plan, act early. Know your KPIs and your monthly numbers, study them, look for trends. If something is happening for more than 3 months, it's a trend and you need to create a plan for it. If you think something might be happening, it's probably too late. You need to be ahead of the curve. Next slide, please. So what do you have control over? I call this the finance serenity prayer. You can sell more, you can price higher, you can cut costs. We will examine each of these in the following slides. Next slide, please. Contribution margin isn't something that's often discussed in service businesses or behavioral health because sometimes it's hard to separate fixed and variable expenses, but this is a tool to examine how much profit is generated for each unit sold. This is calculated by subtracting variable cost from unit revenue. This represents the total earnings available to pay towards fixed expenses and generate profit. The contribution margin concept is useful for deciding whether to increase or decrease price. If the contribution margin at a particular price point is excessively low or negative, it would be unwise to continue selling at that price point. It's also useful to determine the profits that will arise from various sales levels. Lastly, it will tell you what will happen if you modify certain parts of your fixed expenses. Next slide, please. Cost containment. This is probably the easiest and most effective way to immediately reduce the pain. First, print out your general ledger or your bank statements if this is a personal situation. It'll be hundreds and hundreds of pages. Go through it with a fine-tooth comb. Look for expenses that do not make sense, you don't remember, monthly reoccurring expenses, or things that don't make the cut. Approach vendors that you have, ask them for help. If they can't help, go bid that product or service to other vendors. Stop investing in CapEx items immediately. Slow down growth. Draw down on any inventory or stock of items that you might have, and only repurchase when necessary. Examine the benefits offered to your team. Perhaps you can slightly modify a health insurance plan or dental plan to free up some cash. Reducing your team is a difficult decision. There's no easy way around it, but take some time and evaluate each process within your business. Look for redundancy and ways to trim the fat. Lastly, examine contracts on leases, better terms. Next slide, please. Accounts payable. Prioritize accounts payable. If you're in a cash flow crunch and you need to conserve as much cash as possible, one of the best things you can do is examine your contracts and look for terms. Use the terms to their fullest. If they have 30 days, pay at 30 days. If they don't have terms, ask for terms. Be careful not to push the boundaries on any contracts or service related to your revenue dependent items, such as billing, compliance, etc. Next slide, please. Plan your cash flow. So look at the last 3 months of income along with your accounts receivable and try to map what the next 30, 60, 90 days will look like. Communicate with your customers, ask them if there's any way that they can help, understand your assets in case you need to liquidate, plan for ways to liquidate, and model what they're worth. Examine the possibilities of factoring if you have a lot of accounts receivable. Perhaps you go out and sell some of your accounts receivable to a third party for cash now. Next slide, please. So debt planning. If you have debt and you're struggling, most important thing is to communicate with your creditors. Many will offer one-time deferrals, interest only, grace periods, re-amortization, other options. Push terms with them, be aggressive, but never miss any minimum payments, anything you commit to. They will likely work with you if you can prove that you do business with integrity. If you don't have debt and want debt, make sure that you have all your records in order and that you have time. Act early. Getting debt can take weeks or even months. Examine all of the lasting implications of debt. Consider personal guarantees and the timing. There are many great products out there, especially right now. Just make sure you do your due diligence. If you need help or a recommendation, again, please feel free to reach out to our team. Next slide, please. If you've done everything we've covered and are still struggling, there are a few other options. First, consider selling your business. It might not be viable for you any longer, but it might present value to someone else. Similarly, you could take on a partner, maybe raise some money from a valuable partner who might be situated to help advance the business. Perhaps acquiring a business might be synergistic to your current operations. As a last resort, bankruptcy, whether it's Chapter 7, 11, or 13, may be the best path. It depends, and really only you can make the final decision. Consumer bankruptcy law is very complex. It's always a good idea to consult with an attorney before making those decisions. Next slide, please. Last, as someone who has made a lot of these mistakes, here are some final thoughts. One, don't operate a cash flow negative business if you're intending for profit for longer than 6 months. Two, you're unable to meet your budgeted projections for 6 to 12 months. Three, your personal health is suffering. You're spending way too much time. There's lack of sleep, excessive travel. Four, you're losing your passion. You're no longer motivated by it like you were when you started. That said, I'll turn it over to Chris Bennett to talk more about the recovery process.
Thanks, Rob. Yeah, and similar to what Rob just said, I'm able to speak through this from a personal lens. I've operated a business that operated in a position of financial trauma for a period of time, and so am familiar with a lot of this from a personal perspective, and of course, the insight that comes, being able to look back and explore upon the decisions that were made or were not made that ultimately led to that place as well. And so, when we think about recovery from financial trauma, I really don't think of it any differently a lot of times than we think about the processes that we may be helping a client work through, in a particular therapeutic manner. There's a quote that I love from Buddha, and he says, "One knife, 10,000 knives." And what it means is that we ultimately only get stabbed one time. But what happens is we end up replaying that stabbing 10,000 more times. And so when we think about what it's going to look like within an organization, or even from within our personal lives, we really have to look at the causes and conditions of the trauma itself, which again, based on whether or not we're experiencing symptoms of post-traumatic stress or these different things that come along with it, we also have to really look at how do we evaluate and commit to practical solutions and applications of practices that are going to allow us to actually look at what's gone on, to identify the causes, and to not respond or experience a triggering response to that, to examining that aspect of the business or our personal life. And so what that really gives us the ultimate ability to do is when we can operate from a position of a conscious, mindful, and strategic mindset, we're not falling into these very natural primal instincts that really are around survival. And so, that's when I think about healing. It's really like, what we're asking clients to do a lot of times is we're asking them to actually be able to sit in and experience what has happened to them, and then to look at tools and practices that are going to actually assist to lower the reactivity, lower the emotional responses to the situations that may have occurred over time in their lives, and how to ultimately be able to see these things without having that reaction, right? So again, I'm not sitting here saying, just go sit down and of course, put everything out on the table and then just sit and figure out how to not be reactive anymore, or not to experience emotions like fear, anxiety, racing thoughts, hypervigilance, all these different things with it. But I think just in terms of looking at defining what this process looks like, this for me is what makes sense from the business or from the human perspective as well. Next slide, please. And so when we think about really what healing will require, and this was a really fun thing for me to sit and toy with, because again, having insights into things I wish I would have done or things I wish I would not have done, it gives, of course, a lot of that hindsight's 2020 when it comes down to examining the way that we've operated in business to this point, or not made certain decisions. And so, really the thing, when we go back to the idea of what are some of the responses, right? And we talk about fight, flight, or freeze. And then we think about, really the first step here is actually recognizing and accepting the situation that we're in. Without that, we really can't do anything, right? It's back to the old adage, right? Like, we can't fix the problem that we don't know that we have. And so really identifying that this is actually something going on is really, really key. So again, really spending some time evaluating your personal views as well as your business views. And sometimes what this may require is actually outside counsel, right? Sometimes when we're in the midst of an experience like this or a business like this, having somebody outside of the business who can come in, who can take a look at the financials, like Rob was mentioning, to go through a lot of those with you, to actually help to kind of have an objective view, can be extremely helpful. So sometimes it's very difficult when we're in it to actually see it. But also what happens is we become very isolated in that process as well. And so one of the hardest things is actually to reach out and to say, hey, I think I may be in a situation. Because we all have these internal narratives and these social constructs that have been built up over many years about what does that mean if I have to reach out for help? What does it mean if I reach out to investors? What does it mean if I reach out to an advisor? Does it mean something about me? Does it mean I'm a poor leader, a bad businessman, whatever it is? And so outside counsel can really, really be key. I think also really important to note is that no matter what, the business doesn't go back to where it was before. And so this has been a conversation that's been taking place a lot amidst the kind of current times that we're in. And you hear a lot of people say, when things go back to normal. I may be the bearer of bad news, or everyone may agree with me. Things are never going back to the way that they were before. And so when we start to look at that through the lens of, okay, so if we know that the business is never going to go back to the way it was, then what do we need to look at, strategically speaking, to ensure that the business is not only going to be able to make it through difficult times, but also continue to thrive depending on how the markets change and the instability in different industries. And so when I think about this, and I think it's in particular with business, but we can think about it from a personal standpoint as well, is if we look at the business actually as something that just consistently operates in between crisis, it completely shifts the way that we look at things. Because we think from a cash flow analysis standpoint, we start to think a lot differently if what we're doing is saying, well, we just got out of one, but we know there's another one that's going to come at some point. And again, the reasons for that I won't get into, but I'm sure you guys can all imagine there are a lot of ways that we can put ourselves into crisis. There's all the practical applications of crisis we discussed earlier. But if we can start looking at business as really just operating in between crises, we're really able to make such more strategic decisions that are really going to ensure the health, safety, and wellness of the entire business. If basically we're saying, hey, we don't know when it is or what it is, but we know we're going to get there again. And so, on that theme is being able to then look at, how do we really get into a full operational and financial analysis, really, as Rob had mentioned, looking at, what are our needs in the business versus what are our wants, setting emotions aside, what are the key decisions that need to take place. And then also, as Rob, touched on, when we think about employees and culture, it's really also taking the additional step to look at how are the decisions that we're going to make, how are they going to impact the culture of the organization as well as the staff, and being able to use that as a key planning tool as well, right? So again, we may decide to make certain changes or not make certain changes because we're examining how that's going to actually impact and potentially more negatively impact the business than the additional cash that may be in the accounts, for example. So, and then I think, also looking from a cultural analysis and staffing impacts. So like our staff, their lives personally and professionally are not any different. It's not separate. And so, really spending time to identify what we may need to do to throw some things in for the staff that are really going to help them. And so what can that look like? I mean, that can look like, again, really creating a strategic recovery plan, be inclusive, be holistic in that. So really looking at the business from every single angle, a full 360 look on examining every avenue of the business and all the spider webs of impacts that every decision we may make has in the business. And so one of the beautiful things about when we think about kind of low to no cost support, which I think is key. We're sitting here talking about whether or not the business is in a position of financial crisis in a sense, or at least we're identifying that it may get there, or we're preparing to hopefully never get there. But even if we are in a place where we're really looking at the business and saying, we may be looking, as Rob mentioned, we may be looking at cutting benefit, we may be looking at some different changes that we need to make from an expense perspective. We're also looking at, like, how do I as a leader, how can I create really personalized interactions with each member of my team on a regular basis so that they're feeling that I'm showing up for them in their lives, right? So how do I create this priority on the relationships that I have within the business? That doesn't cost anything. And so really what it costs is it costs us to be able to ground ourselves and to take care of ourselves so that we can show up in a manner for our staff where they're feeling fully supported and we're fully hearing them, we're listening to them, and we're understanding where they're going. Some of you may have 401k plans. Of course, what comes with a 401k plan is that you have a financial advisor. So each person actually has a financial advisor through 401k. And so, helping the staff to actually understand that, because I don't know about you, but I've gone through opportunities of signing up for 401ks in the past. And sometimes it's a lot going on and you don't even recognize or realize that you can pick up the phone and actually talk to a financial advisor. You also have experts in a lot of areas on your staff. So you think about like all the different resources you may have at your disposal. They may be friends of yours, they may be acquaintances, they also may be internal staff. You may have folks inside that could actually provide mindfulness-based services for your staff during crisis, or yoga practices, or you may have a personal trainer. These guys, they may not do this for your actual business. You may have financial experts on staff. And so I also think the idea of like looking at your staff and saying, hey, these guys are here. They're being paid. What else might they be able to do to really assist us through this process, whether that's from a staffing standpoint or the organization as a whole? Open and transparent dialogue is key, guys. And so having staff that understands and your team that is willing to sit down and have those difficult conversations is really key. Open your team, open the doors to what's going on. Be strategic, of course, because the flip side or the other side of that coin is, of course, if not presented appropriately or in the right way, tone, time of day, there's a lot of things to consider. People can also walk out of that meeting full of fear and walk away really looking for another job as well. So again, that's a strategic process to really analyze how you want to kind of open the door to communication with your staff. But I think like this is all hands on deck, guys. So when we talk about kind of the healing process, it's really like your staff has an entire ecosystem outside of your business. And so paying attention to how, when they leave the office that day, how are they going to go home? How are they going to speak to their spouse about this, their kids about this? How are they going to show up in the house? How are they going to talk to their parents? And so I think when we think about this healing process, like from an organizational standpoint, like what are some things you may be able to do to actually bring in the entire system? And so how can you get mobilized support from spouses or other family members, through, because again, our folks leave and they go home, they don't live with us. And so the idea of how do we kind of model the recovery process, how do we individualize kind of care plans, at the organizational level, but also from the personal level, are really just, again, some kind of quick, off the cuff ideas of how can we step in, provide services to our staff, to our employees, to our partners that like aren't going to cost anything. It's not going to change the bottom line. And so when you factor that in with some of the things that Rob was talking about, it's really a recipe for kind of really beginning this process of healing. Next slide.
So we come to a place where we talk about managing stress and managing stress differently. And whether we're talking about individuals and families or organizations, the ultimate process is similar. In any trauma healing strategy and therapeutic protocol, self-regulation and learning self-regulation is the beginning process. And as both Chris and Rob discussed, with different strategies in different ways, beginning that self-regulation process is the foundation for change. The healing process will involve co-regulation with family members. In the sense of healing trauma, from a financial source, being able to be, as Chris just stated, really transparent and being able to look at how do we use the resources within our family system together to be able to ground, and then to look at the choices and changes in our decision-making and our execution as a family system as a part of the healing process. We talked about safety and transparency in being able to really ultimately have the kind of communication where everyone understands what's going on and where things are happening, and how we communicate that is one of the keys to managing stress. If you ask a marriage therapist or a licensed marriage and family therapist, what's the thing that they spend the most time dealing with? It's communication. And so when we talk about financial trauma recovery and a healing process for individuals and families, we're really talking about being able to have the kind of communication that allows people to achieve that safety and be on the same page consistently, even if their viewpoints or even if their actions are in conflict on the surface, but really support each other in the long run. Being able to maintain that compassion and mutual responsibility, really understanding what are financial stressors to people and what are the stressors around finances that people experience, and being able to see those in live action and understand those in the context of a relationship. And ultimately, when it comes to the healing process, knowing that the types of changes that we've been talking about and that we would advocate that people explore really are about practice becoming progress, that there's no such thing as perfect financial health at every given point. When we look at organizations and providers on a deeper level, what we're really talking about is taking these same principles and applying them at a systemic place. Being able to say that organizations need systemic regulation instead of self-regulation, and being able to look at those measures of how do we manage the stress levels and how do we manage those interactions together as a team. We talk about co-regulation with staff And as Chris and Rob have identified throughout, being able to have leadership execute with precision requires cooperation, collaboration, communication, empowerment, a voice and a choice. All the principles of trauma-informed care ultimately become the mainstay of the healing process. So we talk about safety and transparent communication within an organization. It's really being able to have someone like the CFO or that financial advisor be a part of all discussions during a period of crisis or stress around financial trauma recovery, realizing that there shouldn't be any secrets around finances to begin with, that everyone should be able to ask and understand those questions to feel safe and secure, to understand how things really work so that they can have their mutual responsible portion of their relationship and their portion of a team. And ultimately being able to understand that in the healing process of financial trauma recovery, that again, no organization has this figured out at all times with perfect security at every given moment. And the impacts of COVID-19 and our current adaptations and responses are an excellent example of how practice makes progress. When we talk about the larger picture, when it comes to financial trauma recovery, it really is about awareness, acceptance, and action. Being aware of our beliefs and practices, realizing that the recovery process is just that. It's a process, not an event. As Chris identified, being able to be prepared between different circumstances over time and changing our thinking is an acceptance of the reality in which we all live, but it's a reality tempered by the responsiveness and resilience that our organizations and individuals have. It is an acceptance of changing habits and the influences of how we make our decisions and how we execute those decisions. So when we talk about combining these 3 A's into action, it's diversifying our safety and security, especially when it comes to financial decision-making and financial health overall. It's about realizing that there's more information and communication necessary in the healing process, but also to maintain the healing process over a long period of time. And essentially what we're talking about is the same thing that many of us as providing organizations and providers ourselves are asking our clients to engage in on a daily basis. So what we're asking you all to do is to internalize that same process as a measure of healing your own recovery for impacts to your financial health. At this time, we have a few minutes left. We'd love to open for considerations and discussions, so please feel free to submit your questions through the question and answer box. So as we wait for a question to be submitted by our audience, gentlemen, I'd like to take the time to thank both Chris and Rob for their investment in this process and ask the simple question: how do you begin to recognize the earliest signs of financial trauma in an organization or for an individual?
I mean, from a financial perspective, I would say utilizing any of the ratios that we discussed today would be an early start, right? Or evaluating your financial metrics or KPIs on a monthly basis. You should be able to notice changes in revenue, cost, and I think lastly, another just kind of an add-on point that's super imperative to running a successful business is having credit available, because things happen, change happens, as Chris mentioned. We're never going back to the way we were. So having the life vest available is very important, and that's all I got.
Thank you, Rob.
Yeah, and I think from the standpoint of from a personal perspective, or a business, I think it really centers on some of those things that I discussed earlier around the emotional response, or the way that we tell ourselves the story about what's going on. And so I think that a lot of times we actually know what's going on. I'm not sure where everyone on this webinar experiences it. I know that, like I've always said, like my conscious is in my gut. So I know that when my gut tells me something, my mind may decide that it wants to somehow, change that feeling to, no, it's going to work because of this, or, no, I look at this, and if I connect these 3 dots, then it makes sense. And, like Rob mentioned, right, something that's gone on for 3+ months at that point is a trend, right? And sometimes when the trend has begun to occur like that, we're already kind of deep in it. And so for me, it's always being mindful enough and having enough personal insight into the way that I respond to particular situations to actually say, it really looks like I may be denying what's going on. It may be that I'm really rationalizing what's going on. Now it makes sense to actually get into some of the key kind of financial metrics that Rob identified, where then I can have an objective look, right? The numbers, in a sense, they don't lie. My mind may lie to me. And so for me, it's, I think, being mindful enough to recognize what's going on, and then to jump into, some pretty specific and vital financials, so that I can actually have something tell me what's going on versus listening to my mind.
Excellent. Thank you, Chris. And so we have a question coming in from our audience of someone sharing some of their experience, saying I have never been good with money, and I've always lived from paycheck to paycheck. Since starting their personal recovery journey, they've healed in so many areas except for this one. They just can't seem to get it together. They want to buy a house someday and have good financial security, and they're at a certain point in their career and have a good, stable job. So when it comes to people addressing the circumstances of financial health as part of the healing journey of a bigger recovery process, what insight or opportunities would we offer someone?
Yeah, thanks, Jonathan. So I responded to the question live and just suggested that Nicole reach out to me independently, and I can certainly help for that. That's also been my experience. Been on a journey in recovery for 13 years, and I was also not good with money and haven't been for much of my recovery. But I've learned quite a bit through business school and growing, as a professional. So I'd be happy to share some of that with you if it would be helpful. So feel free to reach out to my email.
Thank you, Rob. We have just a few minutes left, and so I want to thank our panelists for joining and sharing all this wonderful information today. I want to be able to thank you all for your time and investment in our experience today, and be able to say that it's been a sincere pleasure for us to be able to put this information together and share these considerations in the healing and awareness of financial trauma and its recovery. It's been a really lively discussion. We've covered a lot of ground in a short amount of time. So let's take a few minutes back and just think about that. We defined financial trauma and the experience of it. We talked about what some of the sources of that can be, some of the organizational impacts and individual impacts. We shared some different tools and opportunities to look and measure at changes to financial operations. Talked about the healing and recovery process and what will healing require, and mirrored that process all the way throughout. At this time, I'd like to invite everyone to join us in a closing exercise that Chris will facilitate before we close for the day. And remember, we'll have one more poll at the closing of this time. Chris?
Thank you, Jonathan. Yeah, if everyone wouldn't mind, just find a comfortable seat, check your posture, have both feet on the ground. Close your eyes if you're open to it. If not, just leave them open with a soft gaze. And just take a moment and just connect with your breath. Really just feeling the inhale, the belly rising. And the exhale, the belly contracting. This can be fairly triggering to listen to go through. A lot of times the breath will become shallow or paused at the top or the bottom. So really just using the next 30 seconds to just reground. Just feeling the chair, hands on the thighs or on the armrests or down by your side. And just inhaling, filling the lungs up. And exhale, releasing anything that's not serving you. And if you wouldn't mind, go ahead and open your eyes when you're ready. And if you have a pen handy, actually put it in your non-dominant hand. So the hand that you actually do not write with. And write down one thing that you feel like is really necessary for you to act on in the next 24 hours. Don't think about it, just write it. The reason we ask to use the non-dominant hand after even a brief moment of grounding is just because it's connected with the part of the mind that isn't thinking about what we actually need to do. And so it's a fascinating exercise to use with clients. If we had more time, got a little bit more in depth. Really, I encourage you to take an opportunity to really look at this, to not let the mind or the conscious mind get in the way too much, and really look at, what is this particular action? Should I be sending an email to Rob or Jonathan or myself? Should I be reaching out to somebody? What should I be doing? And then I would just say, I want to really acknowledge all of you for spending your time this afternoon with us, and also potentially to walk away identifying at least one thing that you are grateful for. Again, as we, most of us probably know, gratitude does help to pull us out of some of these mindsets and mind frames, especially around fear and anxiety. So walking away from this, having identified something, will be probably helpful for you as well. So it's been a pleasure to spend this afternoon with you guys, and I think we'll be sending out our final poll before we go ahead and close.
Thank you so much, Chris. So we value your feedback and really want your investment so we can respond in future opportunities. So what type of support can C4 Consulting provide in our offerings going forward? You'll also see in the chat that our website and email addresses have been provided for everyone to stay connected. So together we can stay connected and support each other throughout these changing times. We hope you found our time together today collaborative, safe, and supportive. Going forward, we'll continue to evolve this series and based on your participation and feedback, so let us know what you'd like to see us do in the future. Again, I'd like to thank our panelists today for being able to invest and produce and create this opportunity, and for being able to avail themselves afterwards for future opportunities. And I'd like to thank everyone at the C4 Recovery Foundation family for being supportive in our opportunity today, especially those in the background, Jesse O'Donohue and Ryan Rohde. We thank you all and invite you to have a wonderful afternoon. And thank you for joining us.